As we try to figure out where we all go forward with COVID-19, want to bring back a friend of the program, Scott Galloway, who is a New York University professor of marketing. And Scott, there is so much to talk about between the PPP program, the FANG stocks, but I want to jump into something because I started my career in traditional television, and you have a dire prediction for broadcast outlets and television going forward as to what's going to happen to some old world media, but also some new world media. So where do you want to begin? Advertising has fallen off a cliff, at least for old media, right?
Yeah, well, COVID-19 isn't as much something that's going to change everything as much as it will accelerate it. And there's a basic truth that we've been ignoring for a long time. And I say this as someone who's made a nice living preaching the principles of brand strategy, and that is advertising sucks and people want to avoid it. And people don't want a 30-minute gorgeous piece of content from Modern Family interrupted by 9 minutes of commercials telling them how old it is, how terrible it is to get old, or personal injury attorneys. So now technology has enabled anyone with any money to basically avoid advertising. So advertising has become this tax that the poor, the technologically illiterate have to pay. And moving through this crisis, you could almost create a survivability index based on one thing, and that is the percentage of revenues you get from subscriptions. So Viacom gets hit hard. Surprisingly, the New York Times, with about 2/3 of its revenues now coming from subscription, does okay, but there's just no getting around it. Don Draper has been drawn and quartered. The heyday of Mad Men and advertising, those days are over. Advertising is going, and ad-supported companies are going to come out of this much, much weaker unless they have the scale of a Facebook or a Google that will emerge from this even stronger.
Well, even when you're talking about a Facebook or a Google, Scott, I mean, the days of Mad Men, we could argue, have been past us for a little while here with the rise of things like programmatic advertising, right? So for me, the relevant question is, what does it do to a Facebook or a Google? How much destruction is there for that business, which looked like such a fortress going into all of this?
No doubt they're hit in the short term. So the keyword bidding and average prices on keywords and advertising in Google off anywhere between 20 to 40% in the last 30 days. That will absolutely show up in their numbers. But what you're going to see, Julie, with the business of Facebook and Google is it's going to create the shape that the president is hoping is going to be reflected in the larger economy, which will not happen. And that is, it will be a V. And that is, the drop will be violent, but the rip back up will be equally violent, because just as everyone else is playing defense and firms ranging from Vox and BuzzFeed to Condé Nast are furloughing workers, you're going to see, I'm seeing it personally, Google and Facebook are actually hiring, and the team of the best players wins. You're going to see Google and Facebook, their tear back just be extraordinary here, and they will return. If they don't, the ad market will not return probably to pre-corona levels, but you're going to see Facebook and Google probably go from 61 or 62% to maybe even the low 70s. So while they're hurt in the short term, in the long run, they just consolidate power. Most specifically, what's taking place below the surface of the water here, Julie, is they're soaking up all the human capital. Who are the best people at Condé Nast and BuzzFeed? Simple. Look who's working at Google next week.
Scott, there is a movement to try and get Congress to allocate funds to help bail out some of the media companies. We've already seen that with the Paycheck Protection Program. We expect to get further funding today. Then there's the headline from Shake Shack. They got $10 million. They pointed out that each store restaurant has roughly 45 employees. But the perception nationwide was so horrific that they had gotten this money that they're going to return, or not accept at least, the $10 million that they're supposed to get from their bank via the PPP. Do you have thoughts on this kind of measure and the PPP program itself?
Yeah, what's happened with Shake Shack, take that times 1,000, and that's what's going to unfold over the next 6 months as we look at the helicoptering and socialism turned cronyism that is these rescue packages, which are nothing but thinly veiled bailouts. I want to be clear. This is a crisis of historic proportions, you would argue. And we need to, but in general, and I have this viewpoint on boards when we're talking about a decline in business, I don't think you can protect jobs, you can protect people. And we have some bigger questions to answer, and that is, how in America, the wealthiest country, have we put 50% of our citizens in a position of such extreme vulnerability that they are panicked by potentially losing 4, 8, 12, even 6 months of salary. All of these packages, in my view, we should be taking a more European approach where we put money in consumers' hands. But why do we have small business and banks in the middle here? An 11-year bull market is just as historic as a pandemic. Quite frankly, these firms should be laying off people and they should be getting to their fighting weight so they can reemerge from this smarter, stronger, faster. The notion that I was on a call with my college friends from UCLA. We've all been blessed. We've all done exceptionally well. I was the only person on the line that hadn't applied for PPP. These bailouts are nothing but cronyism disguised as capitalism. We need to protect people, not jobs.
Professor Galloway, it's Julia LaRoche. I'm seeing some reaction just on Twitter about, even Harvard getting some of the federal funding. I'd love to get your reaction to that. And then you're talking about this acceleration. What is the acceleration when it comes to higher education? We're talking about, $1 trillion plus in student debt that's outstanding. What's even the value proposition of college going forward, especially some of these debt-laden colleges?
So no industry other than healthcare has raised its prices faster than education, and I'm part of the problem. We have become drunk on exclusivity. When you have the head of Harvard admissions saying that he could double the freshman class at Harvard without sacrificing inequality, the correct question is, well, with a $37 billion budget, why wouldn't you? And what we're about to see in education is the disruption that we've been predicting for decades as parents see via Zoom classes that paying $68,000 for their tuition and what is actually going on in universities is no longer worth it. You're going to see a massive consolidation of the most powerful players aided by big technology, and you're going to see an incredible destruction among the second and third tier universities who have benefited from a cartel that is education. Fordham charges the same tuition as a Columbia or an NYU. In every city, we have a duopoly, whether it's San Francisco with Stanford and Berkeley, Los Angeles with USC and UCLA. And these organizations, we are going to see a massive disruption, and it couldn't happen. We have stuck our chin out in higher education as we realize, you're seeing it just across parents with kids who are saying, am I really going to pay $38,000 for bad Zoom classes, just even in third grade private classes, much less what they're paying for in graduate school? So we're going to see a lot of universities not reopen and fall because of COVID, but a lot of them will never reopen. We are about to see finally disruption in higher education that we as academics who have decided we're luxury brands now as opposed to public servants, we have stuck out our chins, and these fists of stone called COVID and big tech and the best universities are going to partner. MIT is going to welcome 30,000 students to campus, not 3,000 within 10 years, and that's going to cause tremendous price pressure and disruption, and it couldn't happen to a nicer group of people.
Well, but Scott, at the same time, I would push back against that a little bit, because were people paying this money to the elite universities because the education their kids were getting, or because the connections it would give them? And it seems like those connections are not necessarily going away. And I would expand that question to say, there is so much sort of navel gazing and self-examination being done right now about what's going to change after. And then there's pushback against that. Are things really going to change that much after? And I wonder if that's true for universities and a lot of other categories.
Yeah, you're right, Julie. It's not, people aren't paying $68,000 a year for education. What they're paying for at NYU and at Stanford and at the University of Texas, what they're paying for is certification. And that is really the key value add happens before the kid shows up to campus. And that is, once your child is admitted to the University of Texas or to Berkeley, our system has decided they are now have been accelerated into the upper echelons of what is a caste system that it's largely dictated by your college degree. And rather than expand the number of seats as Germany and Canada have done, we've decided we want to create a set of luxury brands such that we can continue to offer more to the children of rich people. People think this is a meritocracy. No, the US is a caste system, but instead of the arbiter being your family name, it's where you graduate from college. So that needs to change. And I do think it's going to change. Unfortunately, the big beneficiaries here will likely be the strongest brands in education. The strongest brand in the world is not Apple. No one gives $100 million to put their name on the side of a building on Apple's campus. The strongest brands in the world are Harvard, Oxford, and MIT. These were built over centuries. They've preyed on the hopes and dreams of middle-class parents. We deliver, my class I deliver a class $7,000 per student. That's got to be 95 or 97 points of gross margin there. Show me any product in the world above $1,000 that gets a 97% gross margin. We need to begin taxing endowments that don't grow their freshman class faster than population. They're not public servants. They shouldn't get tax deductions. They're luxury brands. We need to abolish tenure. We need a class trader. I work with one of the best faculties in the world. A third of them should be put on an ice flow. And incompetence and competence in graduate education translates to debt on young people who are forced to get married later, form households later, not take business risks. One of the moral bankrupt parts of our society is how much we are charging young people. It is time we massively, a Marshall Act kind of expansion of freshman admittees, and similar to Germany and Canada, great kids get a chance to go to good schools, but we don't have a casting with luxury brand schools and everybody else fights over mediocre education at a ridiculous price.
Scott, as I listen to you talk about a caste system in the United States, I can't help but wonder what good is having a six-figure salary and a escape home in the Hamptons when you're dependent upon grocery clerks and truckers and the people at Amazon to deliver the goods you need to survive. And I'm curious, as we go forward, will the salaries for those people come up, but also Amazon? You predict Amazon is going to be the first $2 trillion company as soon as 2021. Tell us more about that.
Yeah, there's a lot there, Adam. So one of the wonderful things about this crisis is I've been watching all these old movies from the 80s that I watched as a kid with my boys. They've said, we've gotten so bored. They're like, well, Dad, what did you watch? And we watched this movie based on this great book called The Little Prince. And the greatest opening line in a movie, it says, what is essential is invisible to the eye. And what we're finding is that a lot of our essential workers have been invisible to us. And that is, tell me an essential worker, whether it's someone delivering my groceries or someone putting my takeout meal in the back of my seat, and I'll show you someone who we haven't paid a living wage in the last 20 years. And they're finally getting some of the recognition they deserve. We lean out our window every night at 7 p.m. and we applaud for our healthcare workers, which is absolutely the right thing to do, and it's a nice moment. But do we lean out the window at 6 or 8 p.m. and applaud the people who are putting themselves in harm's way to make sure that we get our Purell and our Nespresso pods within 48 hours? No, because it's more of a war on the poor. We see these people as untouchable. They screwed up. We live in a meritocracy, we'd like to think, which means that people deserve to be billionaires. But the ugly side of that is if you're making minimum wage, bagging groceries, it means you screwed up. It means it's your fault. And it's not usually their fault. It's a function of a caste system we have. So I'm hoping that what is essential becomes more visible to the eye, if you will. In terms of Amazon, imagine that Jeff Bezos and the president and Doug McMillon got in a room and said, how do we double the stock price of Amazon and Walmart? He said, I know, I'm going to put between $1,200 and $5,000 indirectly in the form of stimulus in the hands of every American. And better yet, I'm going to close down 98% of your competition so they have nowhere to spend it but Walmart or Amazon. That is effectively what has happened here. You are seeing stimulus money helicoptered into the hands of consumers. And where do they spend it? Amazon or Walmart, because Restoration Hardware, Urban Outfitters, and Sephora have all been closed. This might as well be called the Amazon and Walmart Shareholder Act. It is extraordinary. Amazon, first $2 trillion company on the backs of incredible momentum through the crisis. And more importantly, they will become the fastest growing healthcare company in the world by 2025.
And as you point out, Amazon is hiring over the last 2 months, roughly 175,000 people. Scott Galloway, we really appreciate your being here. You are a professor at New York University, a professor of marketing. It's always good to get your opinions.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.